Hello and welcome to this edition of the Intermodal Logistics Podcast. I'm Kevin Baxter, joined by my co-host today, Intech Logistics CEO, Rick Lagore. Hey, Rick?
We travel
Yes.
well.
Yes.
Indianapolis, Long Beach,
Mm-hmm.
not bad.
This is the first of these that you're joining me on. So we are here at IANA's Intermodal Expo in Long Beach, as Rick said. And we are joined by somebody who just presented, was part of a panel this morning here. And somebody who I think we've read and referenced you a few different, I think your name has been dropped on this podcast before.
Oh, nice.
Tim Denoyer.
We share some data with them as well. So we pass it around every Tuesday.
Yeah.
VP and Senior Analyst with ACT Research. So Tim, thanks very much for joining us.
Thanks for having me. Also out from Indiana.
Yes, I know. That was the other thing. I
also.
thought about that as well. Yeah, I'm glad you brought that up because, why didn't we just have him come to the office? But
yeah, why?
Maybe in the future we'll do that. But we had to travel a few thousand miles to meet up in person. So let's start with a little primer on ACT for those who don't know and your background in the industry as well.
Sure, thanks. Yeah, ACT Research is a transportation and commercial vehicle market intelligence firm. We provide a lot of data analysis and forecasting for everyone from commercial vehicle manufacturers to fleets and brokers and shippers. We do a variety of used truck work. We're experts in a lot of things, equipment, essentially. We cover the trailer market as well. We forecast a lot of freight rates and volumes. We use that to predict other things because there's a lot of predictive, leading indicators in the freight markets. We focus a lot on that kind of thing. And we're in Columbus, Indiana. We're a relatively small firm, just 17 people, but a very strong team.
So how did you get into it?
So I was a customer of ACT Research for about a decade before joining the firm.
Okay.
I used it in financial research. My background before ACT Research is in equity markets. I covered the transportation industry going back to Bear Stearns, actually. And I was a co-founder of Wolf Research. Ed Wolf was my mentor for about 7 years there. I spent some time at a few hedge funds and then decided we should move out to the Midwest where my wife grew up. My wife, by the way, is also a former Maersk person. She spent 10 years at Maersk.
Oh, wow.
Before our first daughter was born.
Okay.
And about 8 years ago, we moved from the East Coast out to Indiana. And I've been happy at ACT ever since.
So freight's in the blood then.
Yeah.
Literally. So coming to an intermodal conference, it was funny watching the panel earlier. I think you got a little singled out as the truck guy.
True. Yes.
Did you feel singled out?
Well, that's why I'm here. Really,
Yeah.
is they, welcome different perspectives, and the truck perspective is very important for the intermodal market. They're obviously very intertwined, and we do cover the intermodal market as well. And so while it's not the primary focus, I'd say my expertise is primarily in the truckload market, and LTL as well. But intermodal is just a very important piece of the puzzle.
Mm-hmm. So what is, I think we've talked about this before, Rick, in terms of like how they relate to each other, the numbers that you see in trucking versus the numbers that you see in intermodal. What's your perspective on sort of how they're related?
Well, I thought Adrian did a nice job of saying, is it the tail wagging the dog? Which is the tail?
Yeah,
which
yeah.
is the dog? And I didn't actually call intermodal the tail on stage this morning.
But you called the truck the dog.
Yeah.
So you didn't call us the tail. You called us the dog. You
I
called yourself the dog.
Yeah.
Yeah.
and I think that's true. I think if you look at the numbers, it's we don't know. We're actually starting to figure out, doing our research on market share for intermodal. I know there's some numbers out there for IANA. We're going to be taking that over in the future, and I'm starting to review that work, and obviously it's a mid-high single digit type percentage, and I don't know exactly what the number is, but that's there's a lot of room to grow for intermodal.
Yeah, there's a ton of room to grow. We spend a lot of time looking at the rates and what's going on in the truck market, because we've seen that and granted, intermodal isn't a spot market business, but we pay attention to spot markets because we've seen that there's about an 8 to 10 week lag between what happens in the truckload market and what happens in the intermodal. And then there's a little bit closer leg that if the truck market starts to take off, but the intermodal is standing back, that is probably just a blip on the screen and it's going to come back down again. So it's something that we pay close attention to say, okay, well, we're going to start investing because we know something's going to happen, or we're going to have to sit back and, yeah, guys, that's not the real thing. That's just a blip on the screen because of some outside circumstances or conditions that were put out there that was unnatural to the whole market.
Yeah, yeah. We think spot rates are extremely important in terms of that leading indicator that, and it's helpful on the intermodal side, even though it's not a huge spot business. Having that comparison to what's happening in the truckload market is very helpful for us, and it's like a check. Yeah,
it's a check.
And truckload dynamics are moved by a lot of different things, but we're all just trying to figure out where that capacity balance is going to be, and I think we got very close to it earlier this year, but we're sort of moving in the wrong direction.
There's a thing that you brought up on the conversation on stage today, which was there was so much truck capacity that moved to private fleets.
Yeah.
So, and we're always paying attention to, well, this is the tonnage that ATA is putting out there, but that tonnage is only really measured, that they're measuring is really just the for hire truck side. Right. So where did that, so we're since it's become a bigger piece, the private fleets, that piece of what ATA is reporting on isn't showing us, it's not quite the real picture.
I think that's right. I think the for hire market is almost half of the market, but it's a minority of the truckload market. And I think it's sort of misunderstood. And when people talk about the freight market, they focus on a minority of the market because that's what's very measurable. And I think what's been happening with private fleets is very significant. And to put some just rough numbers around it, we think the total fleet has grown by about 20% in the past 5 years.
Okay.
We think total freight has grown about 15%. We did go through a freight recession during the inflation surge of 2022, but by the end of 23, freight volumes were growing again.
All right.
But we haven't felt that in the for hire market, have we?
No, we have not.
But if you look at the economic data, it's there. The economic value is being added, and to some extent, yes, it's productivity. We're adding to data centers instead of housing construction, and there's just less freight in a data center than a house.
Oh yes.
And so that's part of the issue for sure. But I think a big part of the issue is this private fleet capacity addition. I think they added probably 80% of that capacity, and they did it at a 70% utilization rate, whereas the for-hire fleets run at 90%. So that difference, sort of unproductive capacity. So it's not really 20% capacity.
That's right. And it happened at a time of extremes. So it kind of got lost in the shuffle is what was going on in the overall market, and the percentages that you gave this morning. I can't remember the exact percentage, but it was significant. Significant.
So is that sort of it's kind of hidden in a way to be able to track that. How do you sort of glean what you can from and how much is actually going in the private side?
Yeah, you're right. It's tough, but we can. There's a fair amount of government data on what's in the for hire market at least, and we know what gets sold. So one of our key data sets that the manufacturers report to Act Research, and we report out every month, is truck sales and truck production, and just what's in inventory, what's in backlog, and those kind of statistics on what's happening in the new equipment market. And so we can get a pretty good estimate of the total population, and we think beyond about 12 or 13 years old, the tractors are no longer really effective in the truckload market. They may be in drayage, but when we're measuring truckload capacity, we exclude anything older than that, and we measure the fleet in those terms. And so I think we can, it's not something we can do very precisely. Private fleets are by definition private, but we can, I think, come up with pretty good estimates.
And how about in terms of like the volume side of that, then how much they're being utilized? You mentioned, you gave a number there, so you obviously have some kind of information there, but yeah. Yeah,
I mean, there's some really good survey data. We're part of the National Private Truck Council and ATA, and it's good to work with lots of these different groups that that measure things in their own terms. The National Private Truck Council sort of represents those private fleets better than most, and they have their own survey and estimates of the size of that market, and so we think that that's pretty helpful as well. I mentioned sort of the splits. What I didn't actually mention on stage, if we had more time, was just the cost differential between private fleets and for hire. And this is one of the reasons, there's a lot of concerns about the economic outlook in the near to medium term. But one of the reasons to be optimistic about the for hire freight market outlook eventually,
at some point,
beyond these headwinds, is just that cost differential between private and for hire fleets. And it is hard to quantify the cargo theft piece of it,
right.
and that's not in these numbers. But NPTC, National Private Truck Council, says $4 to $4.50 per mile is the costs for private fleets. There is some general shorter length of haul that drives that up, but the spread between that and for hire costs is it's at a record level today. And so the cost economics would suggest that freight should be coming back to the for hire market, but there's still some excess capacity, and it is very hard to measure exactly what that is. And I talked about that example of a big shipper increasingly using private fleets instead of for hire fleets, and not even just going to a broker or the spot market, but actually just using private fleets in their bids. That was news to me recently that's going on.
Yeah, I was going to say the private fleets are more expensive because of all the empty miles.
Yep.
And we're seeing in different segments, and it sounds like you ran across it on the RFP side, that you're seeing that people are using, if they can find a way to really create a brokerage division to go ahead and move those empty miles, then that becomes something different for them. So what we used to think of our competitors, in some cases, our customers may become our competitors. And if some of them decide to go take the private fleet and go that direction, but yeah.
But one way to think about this is I totally agree. From a cyclical perspective, is that they realize that their costs are out of whack.
Yeah.
And they're doing a number of things like starting their own brokerages, but also like cutting their capex that are going to change the cycle dynamics.
Right.
And I think that's important to point out. And we can see it in our day cab data within the Class 8 market. We break it down between straight trucks, sleepers, tractor sleepers, tractor day cabs. There's a few tractor straight trucks out there, but not that many. Most straight trucks are day cabs, and I'm talking about dump trucks and that kind of stuff. So we exclude that when we talk about tractors. But the tractor market, we split up into sleepers and day cabs, and we can see that day cabs, which is mostly private fleets, are particularly weak right now.
Okay.
So that disinvestment starting to happen.
I'm starting to get a little bit encouraged. Short to midterm, not super encouraged.
Yeah.
And the supply side's starting to correct. How about that?
Okay, we'll take that. We'll take it. We'll take any little bit we can.
That's called a green shoot, right?
There's a green shoot. There's been lots of brown shoots.
Is it not green? Not
well, yeah.
Light green.
There's so many things that could just trample on that green shoot, but yes.
So, I mean, one of the things that people always ask you then, and you put out a lot of information about, is we've been talking around it a little bit, projecting like where things are going, and do you have any kind of outlook going forward as to when you think things might start to tilt in the positive direction, I guess?
Yeah. No, it's a great question, and it's a hard one. Particularly hard to answer when there's so many unknowns out there these days.
Yeah.
But what I would say is probably the most important one that we're watching that could make things better sooner than expected is this Supreme Court case in early November where the IEPA tariffs are being challenged. I'm no lawyer, but it's pretty clear what the U.S. Constitution. I went back and reread it recently. Section 8 there, it says it's Congress's power to tariff. And so if that's upheld, then I think there's still some pre-tariff shipping that happened earlier this year that it will be paid back. There was some inventory building that's got to get drawn down.
Yeah.
Some of that's already happening a little bit here and there, but that's inevitable. But we're very concerned that the price of goods is going to rise 5, 6, 7, 8% over the next 6 months ish,
Mhm.
and that's assuming something like a 1/3 pass through of the current tariff rates. So we think most of the tariff effects have not been felt yet by the consumer. And we think that's still to come unless the Supreme Court comes in and changes the trajectory. So I think that a lot rests on that decision. I think that's probably the biggest decision of the year for freight. I do think, and I've heard this from shippers, that could swing the pendulum back to the for-hire carriers from a pricing perspective. Shippers are scared of that.
Right.
Just saying, I don't know exactly what the outcome would be, but I think it's, from a pricing perspective, I don't think it adds too much urgency because I think there's generally known that's pretty, it's a lot of capacity still, but, but we have been in the rebalancing phase for a while, and if there's sort of a positive catalyst for U.S. consumers, then there's some validity to that theory.
As you're talking about it, I would completely agree, because that would be because right now we're in the process of taking money out of the consumer's pocket, and also in the process of reducing the number of options that they have. I've been talking with different shippers, whether they're a customer or maybe a potential customer, but I mean, some of them are talking about the amount of money that it's the biggest tax increase that they've had in their company. $68 million. One company I was talking with, that was the first 6 months of their fiscal year, and they couldn't find a way to pass it on to customers. They couldn't find a way in terms of price increases, because they were finding that the consumer was actually trading down to something else. So they didn't have the option. So if there's an option, or there's something that changes in November, that is a huge catalyst, because this shipper in particular, and there's others that we've talked with, they're sitting on their hands. They don't want to do anything, and all of a sudden they have the opportunity. One, they get an inflow of cash that they haven't seen, and a consumer that's been sitting back, or consumer right now, the consumer still looks strong, relatively strong, so they have some cash to spend. And if we get this in there, that would push a lot of shippers to do some stuff that they're not doing today. It would push also some smaller manufacturers that have gotten out of expansion. Now they have money to go ahead and put in capital, which right now they're just trying to stay alive in some cases. Mm-hmm. So that would be okay. So you made me slightly positive again.
No, should I be?
I'll tell you, the people in the office would love for you to stop by every now and then, because there are days that I go, oh no, not now. Here comes Rick. He's got 3 cups of coffee and.
Well, I mean, there's certainly reason for caution.
Yes.
And if goods prices do go up that much, there is significant demand destruction that is just inevitable. It just reduces affordability. We're seeing it in housing. One of the interesting things that's going on in housing right now is, which is a huge driver of U.S. manufacturing. I think it's something like 40%. Because there was a rumor that the administration may declare some sort of housing crisis and roll back some of the tariffs on building products, and do other things like that may make housing more affordable. I don't know, but or at least expand housing somehow. So there are some there's silver linings out there that but yeah, no, the current tariff rates being close to 20% is not a positive outlook, and as long as that is sort of the base case, and I sort of hate to say that that's the base case, because the Constitution is pretty clear.
Right. Yes, it is.
But I've also heard from some plugged-in people in Washington that the administration knows that those tariffs are mostly illegal, and it's part of this whole flood the zone strategy, and they're just going to take what they can get at the end of the day. Hopefully they'll obey the Supreme Court regardless of the outcome.
Right.
Yeah. Well, the other piece of this is the lack of certainty throughout this whole process, which has been talked about here and other places for quite a while. Even say the Supreme Court does block them, there's also plenty of discussion of other methods to still implement tariffs in some way. So how quickly do you think people would even get to the point where they're fully comfortable? Because we often hear this discussion of, okay, when things settle down, everybody just knows how, like, the rules of the game. Mm-hmm. That's when things will normalize to some degree.
Yeah. Yeah, and I think there's not to get too wonky on the specifics of the tariffs, but like there's a setup here that not to be too optimistic about, but this is a scenario that could play out, that if the Supreme Court rules the IEPA tariffs illegal, that's positive for the demand side, as we just talked about. But on the supply side, costs are going up significantly because of Section 232 and Section 301 tariffs, and those are hitting both trucks and trailers, and those costs are going up significantly. There's also a Section 232 investigation because Mexico assembled trucks have been excluded from the tariffs so far, and the U.S. manufacturers are, not happy about that. Surprise, surprise. And that will have an outcome by early next year at the latest, but potentially even considerably sooner, which could push equipment costs up even more. So a negative for the supply side, while a potential positive for the demand side, which would be potentially really good for freight rates.
Yeah.
Or positive. I mean, not good for shippers, but
well, anything on the freight rates would be good, because freight rates, for the most part, I believe anyway, or I'm an opinion of, that we've gone as low as we probably can go, because there is a cost of doing business. Just putting the truck, just owning the truck, just fueling the truck before you even do anything else. I think rates can only go up. I mean, could it go down a little bit? Yeah, it can go down a little bit. It always has some movement as companies are willing to give away some freight for a while, because it's always easier to keep a customer than try to bring them back after you lost them. And there's always somebody out there that's willing to go another penny a mile lower. And in these times right now, companies are looking for any dollar or penny they can grab. So it could potentially go a little bit lower, but there's a point that we're pretty darn low, I think.
Yeah. At least sort of bouncing on the bottom.
Yeah, we're bouncing on the bottom, which we have been really for a long time. Months.
Yeah. You can actually, in the truckload spot market, we're not too far from the October 2023 low.
Okay, yeah. I was looking at the rates that we were sending out today, and the rate is going back. The last time we've seen an extended rate of this at this spot level is 2017.
Wow.
And last time I checked, just regular inflation has been a lot more than flat since 2017.
Yeah. That private fleet cost number that I cited earlier, if you just do the year-over-year comparisons, it's like 8% growth in their costs. The for-hire fleet costs have actually been somewhat amazingly flattish. They're aggressively reducing their costs because their cost inflation is still there. They're still facing insurance cost increases and equipment cost increases, and all the costs are going up.
Yes.
But they're maintaining a pretty steady cost per mile just by being very aggressive about taking costs out wherever they can.
Yeah. Need to.
Yeah. Well, I don't know if that was the most optimistic note. I mean, we should have maybe cut off a little bit earlier.
You notice I didn't really talk about specifically or ask any questions specifically on forecasts. And I mean, we just only alluded to them.
Yeah.
So therefore, everybody, I like the conversation we had. And so thank you for coming and spend some time with us. And maybe we need to do this a little bit closer by, and travels, instead of coming across the country, maybe we can travel down to Columbus, Indiana. Although in my book, I thought there was only one Columbus, Ohio, Ohio State. I had, but in any case,
I'll come to Indy.
Okay. All right. So I like the direction that we talked about this, because everyone's talking about negative or the potential, and we can talk all day long on that.
Yeah, there's a lot more to talk about, I'm sure, and we appreciate you taking the time while you're here, and we will convene again at some point. But before we let you go, tell folks where they can learn more about ACT Research.
Oh, sure. actresearch.net is our website. There's lots of info there. There's plenty of contact info on the site. So thank you so much for having me.
All right. Much appreciated. And thank you for joining us on this edition of the Intermodal Logistics Podcast. Please do rate and review us wherever you get your podcasts. Drop us a comment, or you can email us at podcast@intechlogistics.com. And visit www.intechlogistics.com for more about Intech Logistics, the company. For Rick Lagore, I'm Kevin Baxter. Thanks very much for joining us again, and we will be back soon with another episode.